Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Welcome to the NDIS Property Australia podcast. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Today, we are going to be exploring the stats and data behind the research involved with the NDIS in terms of the SDA sector. This is a very complex and very complicated field of information, and we will do our best to cover some of the important facts relevant towards helping you, our investors, decipher the relevant information to help you on your property journey. Today's podcast is all about looking at the facts and the figures and the forecasts with regards to the coming years ahead, and hopefully the information that we present to you today isn't going to be too overwhelming. This podcast today is broken up into two different parts. The first part will be this podcast, and it will cover roughly 15 to 17 minutes worth of data. We will split this podcast into two sections so that if you want to continue to listen to the next podcast, we'll have more information to break down the rough figures, continuing on from the information presented today. We have been very focused on helping our clients understand that investing in the NDIS SDA property market isn't all about high cash flows and high yield returns. It's important to understand that there is a massive need in the community for disabled participants who have nowhere to go and are currently living in nursing homes, hospitals, group homes, and their own families that are not fit for purpose. And the importance of the data today that we present is all about helping you understand that if you understand the data in front of you and the forecast that will occur, then that will help assist you with your decisions on what to invest in, where to invest in, and how to invest in it. As the time goes on, as you listen to more podcasts in our podcast library, you'll understand the different concepts and different information that we present to you, our investors, to make better decisions. The market is all about providing dwellings in the SDA property market for all categories of participants. Improvability is very important because it is covering 70% of the marketplace, and so too are robust participants and fully accessible participants. A lot of the data we talk about in the future podcast as well will cover the HPS, high physical support data, because that seems to be the focus of a lot of the sophisticated investors, the fund manager institutions, and a lot of the investors currently going into the marketplace for SDA. So just because we cover a lot of the HPS information in today's podcast or the next few ones down the track, doesn't necessarily mean we as a business, NDIS Property Australia, are all about promoting only HPS products to our investors. We do promote the diversification mentality and concept for our investors to diversify their portfolios, reduce their risk, and consider other alternatives in the SDA pool of products. In saying so, let's move on to the next topic, or the first topic being HPS. We've been working with many investors across Australia with HPS, high physical support, and we've noticed a certain trend, which is pretty clear to our industry, that a lot of the investors are seeking the higher yield, higher cash flow properties. This being the accessible homes, wheelchair homes, for high physical support. Unfortunately, the market in the NDIS sector, of which there are 500,000 people in the NDIS as participants, and of which there are estimated forecast to be 6% of these participants being SDA high needs, that would equate to 30,000 in the long term minimum. Currently, there are 17,000 participants who are already SDA funded, either living in legacy homes, groups homes, or SDA properties, dwellings. And these dwellings are either apartments, houses, villas, duplexes, and whatnot. So at the moment, of the demographic of 17,000 participants who are already fully funded for SDA, of which there should be at least approximately 30,000 people all up, 70% are in the improved livability demographic. 10% would be the robust category, and the remaining 20% are the fully accessible and high physical support category. At the moment, majority of our investors, or majority of all investors in the market, are chasing after the high physical support. And we do encourage all investors who talk to us to consider the other options. Not always chasing HPS, but rather the improved livability, the robust, the fully accessible designs. They are the most designed homes as per the requests of civil providers and housing providers, because they are aware of the demand in the marketplace, in the sector for the NDIS for these homes. Speaking of the dwellings and homes in the marketplace, as of August 2021, the breakdown of the three most concentrated states, being Queensland, Victoria, and New South Wales, are as follows. The estimated number of SDA places and dwellings will be, for Queensland, 462 dwellings with 681 places, and that's a ratio of 1.47 participants per dwelling. With Victoria, there would be estimated places of 416 dwellings, which covers for 559 places or participants, and that's a ratio of 1.34. In New South Wales, the total dwellings, SDA dwellings, would be 408, with a placement of 585 participants, with a ratio of 1.43. So that's a rough indication of the average number of participants per dwelling. And as we can appreciate, the different dwelling types being single occupant apartments with only one participant only, with a 3-bedroom home, whether it's, whichever category it is, would be one carer plus 2 participants, with a 4-bedroom home being carer plus 3 participants. For a duplex, you'd have two sides on each side, with one carer plus 1 participant, and one carer and 1 participant on the other side. So that's 1 and 1. And it could be with duplexes, carer plus 2 on one side and carer plus 2. So as an overall average, I think one of our research reports shows that there were 1.8 to 1.9 participants per dwelling. And moving on from that, let's discuss the stats and trends in the SDA market. There was a recent urban developer summit online with all the professionals in the NDIS market who are associated with the SDA sector. There was a speaker talking about how the average vacancy rate across the entire SDA market in Australia was about 2.3% vacancy. We often get inquiries from customers asking what is the vacancy rate, and at the moment it seems to be 2%. It's hard to give real statistics, live statistics, because the market is still in its infancy. The market of SDA, NDIS only began 3 years ago across Australia, and really 1 year ago in Western Australia. And all the products or all the dwellings coming out of the market, from being apartments or houses or whatnot, they are only really 6 to 9 months completed now. So the statistics of turnover, of vacancy, resales is often hard to calculate because the market's still too new. So with the SDA being still in its infancy, there is no real long-term trend. We definitely see long-term a definite flight to quality property from a participant's perspective. All the dwellings that have been built to the minimum standard thus far, they will probably have a higher vacancy rate in the longer term as participants become aware that they have choice and control of who looks after them and where they live. And obviously, as more product and more properties come out in the SDA market, which are future-proofed to be better quality, then you'll see more participants gravitate towards those properties for rent in the SDA market than living in a standard average minimum SDA compliant house or unit. The rollout of product for the last 2 or 3 years has been pretty much 6% of all new stock is HPS, and that is a trend which will definitely see the marketplace become more mature and saturated in the coming years. A lot of the investors, both corporate fund managers, sophisticated investors, and mum and dad investors, have really focused towards that higher yield, higher cash flow investment of SDA being the high physical support. Our only advice to investors long term is consider don't assume a maximum return of 3 HPSs. That is a common theme by a lot of people who are going to the marketplace. Assume you have a variety of different mix of tenants, being improved livability plus FA, fully accessible, and HPS. Based on the forecast, at the moment, we just in January 2022, we've just early January, just passed, we've reached the milestone of 500,000 participants in the NDIS. Now, those participants of 500,000 are based off SIL and SDA participants. So remember, in our earlier podcast, we mentioned that 6% of the entire NDIS market is high needs SDA participants, and the rest, 94%, will be SIL participants. So we are already at 500,000 in 2022, January, and it is expected to see the number rise to about 870,000 by the year 2030. So with that in mind, 870,000 at 6% SDA concentration rate average. We're looking at probably around about 50,000 participants in the SDA market out of the 870,000 by 2030. So that would require 50,000 places with an average of 1.9 or 2.0 participants per dwelling. We would require 25 to 30,000 SDA dwellings in Australia to be produced in total in the coming 8 years. So here we are at 2022 with a total of, in 2020, the statistics were just under 1,800 new SDA dwellings supplied to the market. So there's and that's, I think the total number is, the total number of SDA dwellings as of June 2021 is approximately 6,200 dwellings, right? So of the 6,200 dwellings, 1,766, 1,800 I mentioned just then, are the new product supplied to the marketplace. So from the 25,000 to 30,000 dwellings that are required for the SDA market in the next 8 years, by 2030, we are only at 6,000 dwellings so far, right? And of those 6,200 dwellings, they're not necessarily the latest SDA produced product. There's still a lot of legacy and group homes in there, and a lot of participants are still in the hospitals and nursing homes, as well as living at home with mum and dads as well. Speaking of legacy products, It was mentioned in the recent webinar that the legacy products, being the older style homes prior to the NDIS, are being defunded, and participants' choices are now growing, and there is definitely more movement of participants nowadays over into the SDA sector from the legacy and still housing. A lot of the improved livability participants are sitting in still housing, and they are just waiting for, either they're not aware of SDA, being themselves or their families, but also more to the point now, there's no product out there because, as we know, in the housing boom in the last 2 years in Australia, there is just no land out there in Sydney, Melbourne or Brisbane. There's minimal land access. And as a result, the pipeline of product being built is taking long to produce because it takes a year to a year and a half to produce a house and land product for NDIS SDA. So legacy homes have participants who are still undecided with regards to their future, where they're going to live, and that's about 77% of the people. And they're probably 3 to 5 more years away from actually deciding to cross markets from group homes and legacy homes into the proper SDA homes. The investor market is becoming more sophisticated. There's about 17,000 participants who are pre-NDIS who are living in they're living in homes that are not fit for purpose. So a key phrase that you'll often hear in the SDA NDIS commentary online or in other podcasts are the words fit for purpose and choice and control. So if you're living in an older style home, first of all, if you're living in a nursing home, that's not fit for purpose. In a hospital, not fit for purpose. You're living at home with if a participant is living at home with their mum and dad, that environment there is not fit for purpose, right? Particularly if the parents are aware. The parents are aware that they're not going to be around forever, and there needs to be a backup plan for their children or child to live in an environment whereby they are being looked after appropriately in a disability home or environment. And with the government funding in place, with SIL funding and SDA funding, this program, one of the world's first, this NDIS program, allows for people with disabilities to have that choice and control of how they live and who they live with, right? So the choice to choose their own care provider, their choice to choose, in a way, their own housing provider if the product is there, but how they live their life to have more independence. And you'll come across, as a investor, I assume that you'll come across more commentary online about the words SDA, MTA, STA as well, short-term combination, which is different from specialist disability accommodation. Okay. I know that this podcast today is all about statistics, and I want to keep on going through it all because it is a bit to absorb. But right now, there's between 15,000 and 17,000 SDA funded participants. And there's basically right now, based on the 30,000 target or goal, there's a 12,000 shortfall for dwellings. But in the next 3 years from now, being 2025, we should have 50,000 participants who are SDA, should be SDA qualified or earmarked. So the market is still in its infancy. There's a lot of maturity to go in the marketplace for the SDA market. More and more investors are coming to the marketplace to seek those investment returns, and I'm sure that we all want to have, as investors, to have a social impact on the community, and it's our job as consultants in this marketplace to work with peers, our peers being other advisors, other builders, other developers, and to you as listeners, the investors, to bring more awareness and bring more clarity towards the statistics behind the trend or the lack of trend in this marketplace. There are, we won't talk too much today, but there are certainly issues like valuation problems with funding, with finance, with lenders that needs to be overcome. And then also the challenge of working with building the right design product in the right area at the right time as well. The institutional investors who've been in the marketplace for the last 1 or 2 years, they all have a exit strategy as well, and their goal is to produce more, the HPS apartments and HPS houses in a line of 10 or so, hold it for 10 years or so, 10 or 12 years, and exit from there. So everyone has an exit strategy as well, and we advise all clients, all investors, to also consider what their options are, because you can't always assume the most rent coming back in the most timely scenario, because maximum return and minimum vacancy is ideal, but it may not happen the way you expect it to be. Look, I wanna end it here and not go too further on the statistics and demand here, but there's certainly a lot more information which we want to talk about in the coming podcasts, and I want to welcome more of our team in our business here of NDIS Property Australia to talk to clients if they want to ask questions. We're here to help everyone who wants to be part of the social impact of NDIS and SDA, and we encourage you to talk to us and call us our office. Our number is 1300 254397, and it's NDIS Property Australia. Happy to talk to you more about more information in the coming few podcasts, but for now, I'll definitely sign off on this overwhelming session of statistics on supply and demand, and we'll cover more of this in the coming podcasts as well. Signing off, thank you very much, and have a lovely day.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.